Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for February 11th, 2024, although it is February 10th. I'm recording this video. And by the way, I know my wife doesn't listen to these videos, but if you do, happy birthday to you. We've been together for about 25 years, so that's probably why she doesn't watch these videos. But in case you are, happy birthday to you. I love you, Lisa. All right, I want to talk about this last week. Obviously, the S&P closed above 5,000. I said 2,000. Freudian slip, maybe? I don't know. S&P closed above 5,000. Volatility stayed subdued. I thought we were going to explode more this last week, but volatility stayed subdued. S&P continued to rally, and the volatility, speaking of which, the daily sentiment index, which is one of those readings that I tend to pay close attention to when they get extreme, volatility is at very, very low extremes. So that means that volatility is at risk of pushing higher, which would coincide with stocks coming down. But as you know, stocks have not been coming down. So we've got a lot to talk about this week, because this week is CPI data, and the dollar is going to be on the move. There's a lot of potential breakouts, breakdowns coming, so make sure you stick around for all that. And I have to say that if you like these videos, give them a thumbs up, subscribe to the channel down below. Now, some people believe that subscribing to our channel means you have to pay something. No, subscribing to our channel is free. This way you're just notified when new videos of ours are published. So make sure you subscribe down to the video to our channel below, and then also hit the bell icon, because the bell icon will actually send you a notification when one of these videos pop up. Anyway, subscribe, hit the bell icon. Also want to mention that as we get started, you can actually go to the very end if you want to skip everything that's happening this week, and you're like, I just want to hear what Blake's trade ideas are, and a review of last week's ideas. You can scroll all the way to the end of the video if that's what you prefer to do. But do thumbs up these videos, if you think that they're valuable to you and they make a big difference in your trading week. All right, let's get to it. Like I said, it's a CPI week. We also have, I'm gonna start off by saying that this week it kicks off with the RBNZ governor, he's speaking. You know why it matters? I'm gonna tell you why it matters, because if you look at the Aussie New Zealand, a lot has shifted, and I'll tell you, I've been trading the Aussie New Zealand quite extensively this year already to kick off the new year, if you will. Some of you may remember, actually, at the end of last year, I was looking at the Aussie New Zealand as being a really big triangle. Obviously, being a big triangle, I've been expecting a move off of these lows. So what happened this week, and there's a reason why this is also very important, because I was playing this the beginning of this year. There's a 200 DMA. Actually, let me just pull up our charts that we normally go through. Excuse me, I'm sorry, I got the hiccups right now. Let me pull up the Aussie Kiwi. I'm not sure where it's at here. Oh, there it is at the very bottom. What you're going to see is I've been playing it off of this support quite extensively, and you can see around the 200 DMA. So every time I get to the 200 DMA, I would pare back my position. And all of this, by the way, is that if you go into the Forex Analytics community and you go into the trades room, you can see what positions myself and other traders are taking. But all year, and that's all, you can keep going back and back and back and checking all that out. This year I've been playing it off of this support, and then what I would do is I would just sell it when it gets back to the 200 DMA. Well, this week we actually saw a breakdown in the Aussie Kiwi, and the expectations for New Zealand rate hikes have gone up exponentially following the New Zealand jobs data, which, by the way, I mean, if you look at, I'm trying to think what night that was that the New Zealand jobs data came out. I believe it was Wednesday night. Maybe wrong exactly when that data came out. I'm trying to find it here. Was it Tuesday or Wednesday night? To sift through all this data. Oh, I don't think I even have New Zealand on this calendar. I have it on another calendar. Anyway, when that data came out, what you saw is the Kiwi break down. Well, we can probably notice right here. So when that Kiwi broke down, I got out of my remaining longs because I was waiting for the data to come out to add back to them to look to go long. But because that economic data came out and the jobs data was so strong, expectations started to move. And now May, let me clarify that really quick. Let me just double check. Expectations for the RBNZ to actually raise rates this week have gone up quite substantially. And matter of fact, I'm looking for my notes here. Expectations have gone up, like I said, I think it is for May. I had 25 basis points is priced in now for May already. And so when you have Orr, who's speaking twice this week, it's going to make a difference. And that's why it's going to be really important that you pay attention to what he has to say, because the Aussie Kiwi, I'm going to talk about this pair a little bit more and more about New Zealand dollars as we move along. But it's important that we listen to what he has to say on Sunday night, and he is going to be speaking. All right, let's continue on with everything else that's happening throughout the course of the week. So on Monday, we have FOMC Barkin and Bowman. They're speaking, and let's take a look at the dollar index, because the dollar index, we saw a little bit of a. Let's go over to the Dixie. You can see we're just kind of consolidating. We're actually consolidating, and I want to show you this. We're consolidating above the 38% retracement. Whenever you're trading, you guys that know me already know what I'm going to say here. But when you get a move like this, whoops, I didn't mean it. That looks kind of squiggly. Let me go over to a 4-hour chart. This is going to be a little bit easier to illustrate this. Whoops, and it'll help if I pull this. It'll help if I pull this over and zoom in a little bit. So whenever you get a move higher, in this case, and then you pull back to a 38% retracement, that's just suggesting it's a pretty shallow retracement that we're going to continue to bounce. Now, we did earlier this week, and we've pulled back a little bit, but you have to admit the dollar is holding up really well considering where stocks are at. Usually when stocks are higher, the dollar is being sold and it's being deployed buying everything under the sun, including Aussie, New Zealand, Mexican pesos, you name it, sterling, whatever the case may be. But the dollar is actually holding up quite well, and we're in this ascending channel. So while we remain above, now you'll notice I'm going to take us a little bit lower than that 38% retracement. But while we're above this 50% retracement, because we might dip there to begin the week. The reason why I say that is because, look, S&P is gonna we're rallying at the beginning of the week unless something crazy happens between now, the time that I'm filming, and we open on Sunday. Chances are stocks are going to continue higher, which might put the dollar back under pressure. But I think as long as we're above the 50% retracement, we should be looking for higher prices in the dollar index. So that means if you're buying the dollar, look for places to be on the long side, as long as this red line right here at 103.75 stays intact. Now remember, we have Barkin and Bowman FOMC members speaking on Monday. We also have Bank of England Bailey due to speak at Loughborough University in England. Now let's take a look at the sterling. Sterling has actually acted pretty well this week. Now I'm gonna do a little bit of a change up here in our drawings, because obviously things have changed a little bit over the course of the last couple weeks. But notice that 38% retracement of this entire move has held. That's important to understand. Now, what we're also rejecting, though, with the sterling is the 50% retracement here. You'll see it right there at 126, 45, 50, right? We might get a little bit further push up in sterling, maybe towards the 618. Again, dollar weakness to kick off the week. You might see sterling just break through those highs just to trigger some stops. You got Bailey speaking. But we're going to be watching Bailey to see, and I believe Bailey speaks twice this week, and we got a lot of UK data coming out as well. So that's something else to be paying attention to. Monday night. Now, I'm going to go back to the New Zealand dollar because, again, we have RBNZ or, right? Let's delete this. Let's delete this. Let's delete this. And yes, we still have a head and shoulder pattern that is developing, but you know what? We can go up even a little higher to really develop that head and shoulder pattern if that's truly the case. I've been looking at it like a bear flag pattern, which is still valid, even if we go up a little bit higher. So there's a couple things that are working against, technically for the Kiwi. But one of the things that's happening on Monday night, Tuesday morning, if you live in New Zealand, is that you have New Zealand, I believe inflation expectations are going to be out. Let me confirm that. Let me pull up my calendar here. So yeah, we have New Zealand inflation expectations on Monday night or Tuesday morning in New Zealand. So those are going to be closely watched, especially after all the shifts in interest rate expectations that have happened. Now, in case the New Zealand dollar continues to break out, I'm not so much focused on the New Zealand dollar for a bullish breakout as I am in the Kiwi yen. Take a look at the New Zealand yen, and I'm gonna show you something really, really important here with the New Zealand yen. This is a long-term trend line that we've been flirting with it quite a bit, but notice where we closed the week. We closed the week at the highs. Now, what we've also seen on this weekly chart, this is, I want you to just think about this for a second. Every time we hit a new high, at least over the course of the last year or two, we hit a new high and then it reverses. That's something that we should be paying attention to. But just because we're moving up against a wedge resistance doesn't mean it can't break out and turn into a really serious uptrend. And that's the one risk I believe that exists, especially if you're following what's happening in the yen, which we will talk about in a little bit. All right, continuing on. Actually, you know what? Before I continue on, let me just say this. If you guys enjoy these videos, thumbs up. More importantly, try out Forex Analytics. If you haven't tried out Forex Analytics, it's only $1 for 10 days. All right, download the mobile app, jump in the chat room for those 10 days, and see what it's really like to be involved in our community. We have one of the most active trading communities, whether you're talking about, in the general chat room, and you just go look at all the conversations that happen throughout the course of a day. This is Friday when it's slow. But just go through and just see all the talking and the chatting and the trade ideas inside the general chat room. Then go in the trades room if you specifically just want to see what people are buying and selling. Myself and other traders from the Forex Analytics staff are also posting in there as well. You can go to news and research room, get all these Bloomberg articles that you want to read and some of the highlights, S&P room, Spanish chat room. There's a lot going on. So make sure you try out Forex Analytics. One of the best ways to get involved, check out the trader funding program, especially if you want to learn how to access larger accounts and you don't want to risk your own capital. Well, the trader funding program is a good place to start. So at least check out what it is and how it could really benefit you. You can trade up to $1 million of our capital, and or especially if you don't have that kind of capital available to trade. All right, let's continue on going throughout the course of the week. So on Tuesday, we're still in earnings season, by the way. Just to let you know, Tuesday morning is like Airbnb. I don't care about the stock so much. I care about what they have to say about travel. And so just kind of pay attention to what Airbnb, for those of you that follow what's happening in the equity markets, which you should, their earnings are going to be on Tuesday. Now, going back into cable, we have UK claimant count change, average hourly earnings, and that data could be a market mover for sterling. Now, I want to talk a little bit about how important this level is, this 38% retracement. Let's get rid of that previous fib level that I drew up there for you. I want to accentuate how important this 38% retracement is, because what you're going to notice is the 200 DMA is just above it. So there's two real key levels of support for the sterling. Okay, let's get rid of this. We don't need this line right here. The 38% retracement, which is 125.30, the 200 DMA, which is basically about 125.60 roughly. Those are two real key levels. If those levels for some reason this week break down, then that's going to be problematic if you're bullish sterling. But you'll notice what's happening with this currency, it's developing, and I'm gonna get a little bit more, kind of. I guess we'll just talk about it this way. This is a potentially a cup and handle pattern, but inverted. So an inverted cup and handle pattern will basically extend you the distance of. Oops, let me get rid of that. It'd be the distance of this range. So it's something to pay attention to, especially if we start breaking down. Like I said, there's a lot of UK data coming out this week. Bailey's speaking a couple of times this week. Pay attention. One of the other really key events, in my opinion, even though I won't be up for it, I won't be awake for it, will be the US dollar, Swiss franc. We have Swiss inflation data. Now, the reason why this is important, I have a lot of Swiss exposure right now, and we'll talk about that a little bit later when we talk about our setups. But the Swiss National Bank, they've really shifted more dovish, and it was and I think it was when you had Swiss National Bank talking about the unruly moves at the end of the year, that really put a shift in the Swiss pairs as a whole. But if you look at the dollar Swiss as a currency pair, this bottom, I think, is very significant. That happened in when there was very little liquidity. In my opinion, it looks like we're going to be putting in more of a A, B, C, D equal leg type of move, which should take the currency pair back up towards 90 cents or maybe even further than that. But it's something that we should all be paying attention to because we have Swiss inflation data. And the Swiss National Bank has shifted to more of a dovish stance. All right. We also, the big event, the big kahuna next week is going to be the US CPI data. Now, I'm going to talk about the dollar yen here because we're going to go in the last week's trade setups about the US dollar Japanese yen stopping at the 78% retracement, which it did, just so you all know, right? It basically stopped right at the 78% retracement. But with US CPI, one of the things that the market's going to be focusing on moving forward is, has inflation been really beat? Has it been beat by the Fed? Which you guys know I don't believe that to be the case. So CPI is going to be a market moving event, and I think one of the best trading currencies to be involved following the CPI data is going to be the US dollar Japanese yen. Right now, I'm very bullish the US dollar Japanese yen. It's been extremely well behaved technically. It hasn't been pulling back, but as I mentioned last week in our trade setup, I was looking for a reversal at the 78% retracement, which we're basically on right now. Now the question is, are we going to be able to extend further dollar yen strength? And after Uchida's speech last week, that has put more pressure, and then then no pushback from the BOJ at the end of the week. That's going to provide further potential yen weakness, especially on a strong inflation CPI print. Now, the only thing that's going to get me bearish US dollar Japanese yen from here is if we do see a reversal back below last week's lows, which comes in at 147, let's say 147.50. Now, break above these highs from last week and break above 150 is going to be very bullish, and then you have to start looking at bull flag patterns and completions of those. So, just to give you a early heads up of what that would look like, that would take us up towards the 127% extension, which is 155. Now, if the dollar yen is breaking out like that, you have to imagine the dollar is breaking out as a whole. But I think the dollar yen should be in your focal point this week through CPI. All right, Wednesday morning we do have, like I said, we're past a lot of earnings, but we have Cisco earnings, which I would be paying attention to. It's very, very large U.S.-based tech company. On Wednesday morning we have Norway's GDP, And so that could be a market mover. You guys know I've been playing the US dollar Norwegian krona to the upside. I'm going to shift your view here on the US dollar Norwegian krona, though. Instead of it looking like, I still believe it's very bullish, but I think you need to look at it with a bullish, like ascending channel point of view. And as long as we stay in that channel, which you can see we're at channel support, which, boy, if, from a risk reward perspective, early this week might not be a bad place to be on the long side of the US dollar Norwegian krona. Just saying, because you know where your risk is, right? As a trader, the best thing for us as traders is just being able to find out knowing where our risk is. We're going to be wrong. What? Yeah, as traders, we're wrong quite a bit, matter of fact, but it's controlling your risk. That's the most important thing for your success as a trader. And you should be taking notes and making sure that is always front and center, whether it's on a post-it note on your computer. It says always watch risk, manage risk, chief risk manager, whatever it is. Knowing that you're always managing your risk is the most important thing to trading, because you will be wrong when you're in the market. So anyway, but I do think that's a decent trade setup for right now, because you can manage your risk. All right. Later on that day, Bailey speaking, testifying before the Economic Affairs Committee in London. But we also have, just after Norwegian CPI, we have UK CPI. Now, I'm going to take you over to the Euro Sterling, because the Euro Sterling has been, fairly, I want to say messy, right? But the fact of the matter is we're at 85 pence. And this is really, really, really critical support. And I know there's a lot of bear UK sterling bears out there. There just are. I'm going to draw this out for you. I'm just going to say this. A break below 85 pence, you got to start looking for a move, towards 84 and change. And I think that is a risk if sterling really, has good economic data this week, strong inflation data, which, you guys and gals living in the UK, you're probably going to have a better understanding of your inflationary pressures that you're feeling. But I don't think I think one of the narratives globally is CPI globally may have come down quite aggressively post, COVID lockdowns, and we're feeling all these deflationary pressures. But I believe that those pressures are waning to a point where not only the Fed, but other central banks, whether it's the Bank of England, European central banks, going to have really start to struggle to get that inflation down sub 2%. On a sustained basis. So anyway, I think that UK data is going to be really important this week. Also on Wednesday, we have the Eurozone, flash, GDP, industrial production, employment change. I'm not really too excited about the euro right now. I'm just going to blurt that out. I think that the euro is in a area where we're going to find a lot of support. You can see the downside's fairly limited, but also, we'll say that any rally has been fairly limited as well in the euro. Now, can the euro break below this 107 and a quarter? This, by the way, is what I consider very, very important support. Can it break below 107 and a quarter and eventually complete the head and shoulder pattern? Yes, I believe that is entirely possible. And if you apply just a wee bit of stock market weakness, that might actually come to fruition, because it's not acting well in a risk-on environment. In a risk-off environment, you might get a little bit of passive dollar strength as a result. Wednesday night, we do have Australian employment. Now, I'm gonna say this: the Aussie, it's been flirting with these levels. This long-term 618 retracement. You can see it right over here, about 65 cents. And I know what you're probably thinking. You're probably thinking, well, Blake, it's come down here and we haven't seen it sell off any further, so it must be time to bounce. Yeah, but have you seen China? Have you seen what has happened to copper? I think the risks are still for Aussie dollar weakness. And on Wednesday night, we're going to get Aussie employment. Now, if the Aussie employment data comes in, better than expected, that's going to, probably allow us to get back towards the 200 DMA, which is what, 65.70. But a weak employment report, okay, then you have to start thinking. And this is, again, I'll reiterate it. It's Wednesday night, but it's Thursday morning if you're in Asia or Australia. This is really more of a bear flag pattern. And, if we see any type of bearish economic data out of the Aussie, you're going to get all these traders that have been hoping that the Aussie dollar would have stabilized and bounced. You're going to get them, flushed out. Because the fact of the matter is, if we can, do a bear flag pattern, that's going to take us down to the 78% retracement. I have to reiterate that something that I've told the Forex analytics community on our free shows. Wait, you don't know how to get to our free shows? Oh, if you don't know how to get to our free shows, just go to where on our forexanalytics.com, go to where it says right over there, it says webinars, right? Then you have the flow show and you have the F.A.C.E show. These are free. You can attend them every day. I won't be on the flow show because I'm asleep during those hours, but Ryan Littlestone and K-Man will guide you. The F.A.C.E show, you'll catch me every morning, myself and our other traders from Forex Analytics, and we'll give you an idea of how we feel that day. Because if you're only watching these videos every Sunday, you're missing. There's a lot of gaps of things that happen throughout the course of the week. So anyway, what I've been telling people about the Aussie dollar is, if I feel, which I don't at this moment in time, but if I feel that stocks are ready to come down, I'm going to probably just blindly start shorting the Aussie dollar, because it has acted so poorly in what should be a positive environment for the Australian dollar, that if you see the S&P start to roll over for whatever reason, things start to matter and people go, oh, I need to sell stocks. Well, then I'm probably going to be shorting the Aussie, like I said, blindly, maybe even with both fists. So watch this economic data. I think we either see the 200 DMA, which I would gladly love to see to short into, or you're going to see a bearish breakdown, and that's going to be putting 64 cents on the radar for the Aussie. Also on Wednesday night, we have, even though it's the Chinese New Year, and by the way, if you are Asian or celebrate the Chinese New Year, Lunar New Year, Happy New Year to you. It's a big celebration all week, but the PBOC is also announcing their 1 year lending facility. That's currently at 2.5%. Will it be adjusted over, Chinese New Year? Why not? It's a new year potential, because we haven't seen it cut yet, or not cut yet. We have been expecting that to be cut over the last couple months. Maybe they'll do it over the holiday. Who knows? Thursday, we have UK GDP, preliminary GDP. On Thursday morning, I've talked already a lot about sterling. Also on Thursday, Christine Lagarde, she is testifying before the Committee on Economic and Monetary Affairs in Brussels. So that's something, if you're trading the euro, you might want to be paying attention to. But then we go back into the U.S., and this is where I'm going to start talking about yields. We go back into the U.S. We have U.S. retail sales, unemployment claims, Philly Fed, industrial production, FOMC Waller is speaking. And, if you look at yields look like they are ready to move higher. Any data, and remember, U.S. data has been very strong. If retail sales continue to be strong, unemployment claims continue to be low, Philly Fed maybe bounces back after having a couple weak prints, you start to see, as long as we continue to see strong U.S. economic data, these yields look like they're going to break higher. There are repercussions for that. I'll get more into yields a little bit later, as well, as we get towards the end of this show. And then also late on Thursday, RBNZ delivering a speech titled "The Monetary Policy Remit and 2% Inflation" at the New Zealand Economic Forum in Hamilton. So again, your focus really should be on the Kiwi this week. I think that the given the fact that interest rate expectations have shifted so much in New Zealand's favor, or has a couple of times this next week to potentially, fuel the fire, or maybe push back a little bit on, market expectations. So we'll be watching that. Now on Friday, you have UK retail sales, US producer prices, also out of the US. We have building permits, housing starts, and University of Michigan economic data. Now, that's gonna wrap it up for what's happening this next week for the most part. If I did miss anything, anything that you're like, oh Blake, you totally forgot this, jump down in the comments below. Let me know if I missed an event here or there, which is highly possible. It's Saturday morning for me here, and I'm doing this video, and hopefully I've caught everything, but doesn't mean I will. Now let's go talk about some of the major markets. Gold. You guys know, and I just want to say this again. When you're looking at gold, gold is struggling after having that big false breakout above 2070. Below 2000 is really going to open up some downside in gold. I would first be looking at, and you can see we're at the 38% retrace. I'd first be looking at the 200 DMA, which comes around 1965 on any breakup below 2000. But gold looks like it's going to trade heavy, or it's already trading very heavy right now. And a move down to 1940 is not impossible at this point. And some would say it's more probable than anything. You guys also know silver, the false breakout should lead to a breakdown. We continue to underperform with silver. So just keep an eye on silver, because if we start breaking below this trend line that comes in at, what is that, 2120, 2130, that's when silver turns really bearish. And that's when my longer term view of silver, if you guys don't know what it is, I'll just map it out for you really quick. My longer term view in silver comes to fruition where we start to see a move down towards, $16. Now, I don't know if it'd reach all the way down here, but a bullish Gartley pattern would suggest that is entirely possible. It ain't going to happen anytime in the near future, but I would imagine, several months from now, if silver is breaking down, those would be some longer term targets that you start looking for, for those of you that want to be long some precious metals. Continuing on, let's take a look at the S&P. So the S&P, I just want to say really quick, obviously we closed above, here we are, we're above 5,000. Relative strength is still divergent. Notice how divergent it is. Now, just because it's divergent, and because we've been talking about this for weeks, just because it's divergent doesn't mean it's a short. If you're long, you just need to be careful. Now, one of my setups has to do with the S&P this week, so I'll talk about that in a bit. But notice how we continue to reach higher and relative strength is divergent. That is obviously a very big glaring risk for the S&P at this point. Okay. Look at the NASDAQ 100. Let's take a look at it. Here's the NASDAQ 100 continuing to rally, divergent relative strength into channel resistance. So, could the NASDAQ 100 go a little further? Sure. I think that we should probably, let's delete this for a second. Yep. A reach above 18,000 to 18,100 seems entirely possible. Also taking a look at the Dow continues to grind higher with the rest of the market as well. Again, divergent relative strength hasn't really stopped the market yet. I say yet, but you can see stronger in price, divergent relative strength. Also, let's take a look at Bitcoin. Bitcoin has been, and I'm going to use, let me make sure I'm going to use a data feed that's working right now over the weekend, because Oanda does not, because it's a US broker. Bitcoin, let's look at Coinbase really quick. And you'll notice that Bitcoin is near those recent highs. And I was looking, and you guys can see, because I've been drawing on it all week, you can follow it right here too. In the analysis, if you just scroll down through and look at Bitcoin, you can see some of my charts that I've been posting up this week, on the breakout 618, getting towards, whoops, that's not my chart. completing a bull or a pennant, and we did the triangle completion. But we continued. It continued even further. I was actually looking at this, and I was like, well, yeah, okay, we rallied and we broke out. We got to where we needed to go. I'm like, yeah, that's probably it. But no, it wasn't. We continued on to 48,000. And look what Bitcoin's doing. It's actually holding on to gains. It's a shame because if you've been listening here for the last several weeks, you know I'm more bullish crypto. I was just looking for better places to be on the long side. I thought we'd get a little bit below where, the 38,000 level. I thought we were going to be trading more towards 32, maybe 35,000. But Bitcoin looks strong. And remember, it's a Wall Street tool to sell things. You might think it's some sort of exchange and a place where you can exchange U.S. dollars for Bitcoin and Bitcoin for this and that. Yeah, but it's also a tool that Wall Street uses to make money now. It's part of the system. So because of that, the downside is going to be fairly limited at this point. And obviously that would prove to be true. I just was hoping for a little bit more downside. Obviously, we got to be watching these highs around 49,000. A break above that, you start looking at all-time highs in Bitcoin. Now, at this point, I want to do, since I think crude oil is pretty much range bound at this moment, I'm going to do our best setups review from last week. So last week, I looked at US dollar Norwegian krona, and I said, I want to be long. Well, I am long, and I've played it actually on the long side this week, but it's come back down to support. And as I mentioned to you earlier, probably is still a decent long, but it depends how you play it. If you're playing it on a pullback, we're at basically levels where we're at Friday. If you played it long on, early last week, and you scalped out of it at 1072, at what we call, what we call bias chart resistance on the US dollar Norwegian krona at 1072. If you played it up to there and sold it this week, great. You made some money. So it depends how you play it. But I still believe that US dollar Norwegian krona is still bullish. Now, last week, I also said the US dollar Japanese yen shorted at the 78% retracement or at 150. Well, we hit the 78% retracement. Now, if you shorted the dollar yen, you have to be really careful now. Because I didn't short it, and let me tell you the reason why I didn't. Even though we got to where I said it was going to go, and I said I was looking for short, but again, if you're not listening to the daily shows, if you're not listening to the F.A.C.E show, you're just going from Sunday to Sunday, you're missing a big part of the story. The reason why I didn't short the dollar yen is because what shot the dollar yen up was, BOJ's Uchida, his speech. And because of that, I was like, nah, I don't want to be short. I just want to see how it acts up here and when we get to 150. And so I decided not to short it. But if you did, you got to be a little careful with it, because what's happening is you look at price, we rally, and then we stop. And then if you rally and you consolidate, the chances are that the next move is probably going to be higher. You're not having enough sellers to step in to actually get it to reverse, right? All right, the next setup is the Euro Aussie long, which basically is at the same price it was on Friday. But if you're playing it to the upside, I'm still very concerned, and I'm long some personally. We got to the channel resistance, right? As I mentioned last week, I'm like, buy it, but I'm really bullish if we get above that channel resistance. I'm looking for a channel break. It's still flirting, and guess how? It's holding up so well. And I mentioned this last week, so let's just look at it again. If you just compare it to the S&P and you look at a little bit longer term, let's go over to a weekly chart. What you're going to notice is there's a big inverted relationship with the Euro Aussie and risk. So if the S&P ever, which is this orange line, ever reverses, that should, what should happen is you should see this. It comes down and the Euro Aussie goes up, and then we end up meeting in the middle somewhere, something like this, right? We meet somewhere in the middle. that should happen, but obviously stocks have been going straight up. So that's prevented the Euro Aussie from breaking down. But like I said a little bit earlier, if stocks actually show some signs of weakness, I'm going to be shorting Aussie dollars pretty much across the board, and I probably won't even look. Did I say that out loud? I did. That doesn't mean that's the right trade for you. Check with your own financial advisor to make sure that trade fits your risk management and blah, 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 and all that other stuff. I'm just telling you guys what I'm doing. But what I do and what you do could be two totally different things. Now, my best setups for this week. First one, number one, Aussie Kiwi. Let me get rid of this. So the Aussie New Zealand, there we go. Aussie New Zealand, I think it's a short. Now, remember, we do have Orr, who's speaking this week and who could change things. All right. But unless we get back above, and let me just make sure that we're clear here, unless we get back above 106.60, you got to stay bearish. So in other words, I am looking for a move back up towards 106.60, and I'm looking for a short. If you get back above 106.60, it turns bullish. Okay, so that's just, again, it's all about managing risk. So if you decide to take a trade, know exactly where you're wrong. If you don't know exactly where you're wrong and you say, you do the calculations and you use your, you're in Forex analytics, you use your risk management tool and you're like, okay, I'm going to short at 106.60 and my stop loss is going to be at 106.84 and I'm targeting back at 105.50 and I'm trading 100,000 in currency, then my risk is $200 and I'm looking to make 1,000. That's a good risk reward. It's almost 1 to 4.5. I can do that. See, that's all we can control as traders is controlling our risk. I would take a 4.5 to 1 risk reward ratio, or it'd be 1 to 4.5 risk reward ratio any day of the week. Any day of the week. Because you could basically be wrong, 4 times, be right once, and, break even. Which I think you can do better than that. Anyway, setup number 2, Euro Swiss. Now, I'm already long Euro Swiss. Those of you in the Forex analytics community already know that. But I think, and let me just go ahead and do this. I'm going to do this for you guys. You know what? I don't want to do that. I'm going to do Euro Swiss. I'm going to use one that hasn't been used already. Let's do that. Get rid of this one. Okay. So the Euro Swiss. Go back to this spike low back in September 2022. You see where we're at? We're above it, right? Do you notice what else I see? I know you do. So let's just go ahead and do it. This is an inverted head and shoulder pattern. Complex, yes. Head and shoulder pattern, yes. Okay. So now, as long as we continue to hold above 94, let's just call it 94 cents because, you can go all the way back down to here. But as long as we're above 94 cents, I'm expecting us to complete this inverted head and shoulder pattern. So what does that mean? That means this. Coming out of that inverted head and shoulder pattern should eventually take us towards 97 cents, which makes total sense to me. Did I say sense all that much? Because that's a pretty big pivot in the market. So I'm bullish Euro Swiss, and I want to add. Oh, here's my notes. I want to be long above 94.50 and add above 94.80. Now, I'm already long, but just because I'm long doesn't mean I don't want to be more long, because I do. All right. And just so you all see it, 94.80 is the 78% retracement, or basically this would be the 88% retracement. So that means that we're clearing this. That means, we're looking for, I'm sorry, 94.80 is the high right there. Okay. So a break above that, then you have, room to add. Okay? Last but not least, number 3, US yields. So I think yields are breaking out. That means that we have a double top in the 10-year. Double top in the 10-year should take us back down to basically 108 in the 10-year notes. And yields, that would equate to a move probably about the 618 retracement here. So in US yields, we're probably going to be moving to something that looks like this, like a move to 460 or so. Okay? So with that being said, I want to say thank you so much for spending your time with me. I hope you really enjoyed this week's Week Ahead video. If you did, please give me a thumbs up. Comment down below if there's anything that I might have missed. And what are your best trade ideas for this week? Let me know. I'll give you my opinions down in the comments section, if you put some down there. So with that being said, I want to say thank you all so much for spending your time with me. I know it's extremely valuable to you. Once again, honey, if you're watching this, happy birthday to you. Look forward to dinner tonight. For the rest of you, have a great remainder of your weekend. Thank you so much for spending your time with me. I'll see you on the Monday morning F.A.C.E show. Have a great day. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.